Hi everyone. We're live here at MPE in Berlin. Fantastic conference, fantastic agenda, great opportunities to network. We're here in the series of podcasts. Today we talk about regulation. It's a follow-up from a panel discussion, a very interesting panel discussion we had yesterday. And I'm very glad that we have Eric here from the ECB to help us talk about some of the regulatory issues we're seeing at the moment. Let's just start very, I suppose, generally. You're at the ECB, you see a lot of the things that are happening. Do you just want to maybe start giving sort of an overall overview of, what happens in the regulatory landscape? There's so many different things taking place. What is maybe the ones that people should particularly focus on? Let's start there.
Yes, thanks. Thanks, Volker. Thanks for having me and glad to be here. Obviously, I'm working at the ECB, particularly on the digital euro. So for me, the digital euro regulation, which is in progress, is obviously the one I'm watching most closely of what's happening in Berlin. But I think maybe on a more shorter notice, just after we've had the first deadlines for the instant payment regulation earlier this year, and we'll have a second deadline later this year, is more urgent, I would say, for everyone. Similarly, DORA, of course, which went into force as well. And I think the other two that are on the horizon are PSD3 and PSR.
Good. I know we spoke yesterday about the PSD3, but maybe today the SEPA Inst. Did you maybe just give a quick introduction of what it is, what it's trying to address? Is there a link with open banking? And maybe educate the audience a little bit.
Well, in my previous life, when I was working in the private sector, I've been working in the European Payments Council on defining a SCT Inst scheme, so an instant payment scheme, which is basically a few pages on top of the SEPA credit transfer, which is just a few pages, but has a dramatic effect on banks wanting to support that, because as many banks have a batch-based back office and clearing systems, suddenly you have to go to a real-time world, 24/7, 365 days a year, which means that suddenly all systems need to be responsive in that time frame as well, which was a huge investment for banks, and which also caused the fact that not many markets quickly adopted SCT Inst. I personally come from the Netherlands, where the decision was taken by the main players in the market to adopt it quite early on. But as a result, the Dutch market accounted for 90+% of all SCT Inst transactions. And things were not moving very fast. At the same time, we saw initiatives coming where alternative payment methods were trying to rely on SCT Inst as a backbone to modern non-cards payment solutions. So that really required a full rollout of SCT Inst. Yeah. And as a result, the regulator thought it was a good idea to give a bit of a push to this very slow development by mandating both the receiving and the sending of SCT Inst, which then forced the market to move much faster, which is why local solutions like Bizum, for instance, in Spain, but also going forward, things like Vero from EPI could actually leverage that infrastructure of having real-time payments everywhere. The interesting part about it is that I always thought that the most attractive one from a retail payments perspective would have been SDD Inst rather than SCT Inst, because actually a lot of merchants don't want real-time payments to hit their accounts all throughout the day, having to do the reconciliation and everything. But anyway, this is the way that was chosen. This is what was launched. And I think it's great to see that's something which I couldn't explain my children, why emails, WhatsApps, Snapchat messages are real time. But if you pay each other on Friday night, it won't hit your account until Monday morning. Yeah. So it's a matter of also staying relevant, I guess, even apart from use cases on top of it.
Oh, no, that's great. Thanks for this. Talking about staying relevant, and I know the digital euro is something that you're very close to, probably very passionate about. Just as an introductory part on this, just explain What is it? How is it going to work? And maybe, why do we need it?
Well, let's maybe start with the why, because I even noticed, but I already had trouble explaining my friends and family at home about digital euro. But even here, among all the payment specialists as MPE, I noticed there's quite a lot of confusion about the topic. And the best way to explain it is basically saying that originally in retail payments, central bank money was the default. It was cash, right? So it was banknotes and coins. And over time, private sector came up with a lot of handy solutions. Initially, they were checks and then cards and what have you, digital payment solutions, which have eaten into the market share of central bank money in retail payments. And that's understandable because central bank money didn't evolve over time, ever since the introduction of the banknotes and coins for the euro. And a lot of very convenient solutions have hit the market ever since, which means that by now, a bit depending from which country, somewhere between 20 and 60% of payments in retail is still done with cash euros, and the remainder is done with digital solutions in commercial bank money. And clearly the cash is on the decline across Europe, with a huge leap, I would say, over COVID, when people even more thought that due to the possible hygiene factors associated with cash, it was better to pay digitally. Now, what we want to do is basically keep some of the characteristics that people love a lot about cash and bring it into the digital age. So what are those? Apart from being a monetary anchor in the real world, we see that cash has a number of very attractive parts to it, characteristics, which is, first of all, it's available to everyone and accepted everywhere across the Eurozone. It is, secondly, also has a very high level of privacy for the payer as well as the payee. It has also always been a very good fallback in case the card systems face a temporary disruption.
Yeah.
So all of that was very popular, but clearly you can't use it to pay online for e-commerce transactions. You can only transfer it to someone who's in front of you by passing money to that person. So what we're trying to do is build something which will keep those characteristics. And in particular, the fallback part is also important for us as the ECB, being responsible for the resilience of the payment system, because we clearly see that in most countries there's not enough cash around to be a credible fallback in case of a disruption. And as we also strive for more European autonomy, while at the same time roughly 2/3 of cards transactions in Europe are not done on European-owned scheme but on American-owned schemes, we also see a lot of private sector, but even state-sponsored terrorism attacking our vital infrastructures. So from that perspective, as we can't count on cash anymore to play that role, we need a second infrastructure in case something happens to the card infrastructure. So how will that work? So that was the why. How will that work? It will be a separate wallet, if you want, of central bank money, which you can actually access via your bank or via any other payment institution that chooses to offer it. Banks will be mandated to offer it. Payment institutions can offer it, where you basically fund a separate wallet of digital euros, either manually, automatically, or in something which we call a reverse waterfall, which is a real-time funding transaction while you pay with the digital euro app or card.
Okay.
So in that sense, it works pretty similar to maybe the closest what we have today is a PayPal wallet. So you have a separate wallet of money, which can be represented in the bank app of the bank you work with, or in a separate digital euro app, which you can use for payments peer-to-peer, online, and point of sale.
Okay, that's great explanation. I think one of the things that you said, and I probably know what you're going to say to this now, is, but the geopolitical situation is probably also quite supportive at the moment of having a European dare I use the word scheme.
Absolutely.
We've tried it before and it didn't work for various reasons. I think given some of the situations coming from the other side of the pond, and
from everywhere actually.
Well,
Yes.
yeah, exactly. You're right.
I think that was our view all along, the geopolitical part. But it's become much more into the forefront of discussions across Europe in the past few months. I think that's very important. And as we aim to make this digital euro also a legal tender, it will imply mandatory acceptance by merchants. So we can ensure that actually, in case of a disruption, it is accepted everywhere as a fallback.
Okay, great. Maybe sort of final topic. It's this age-old debate about regulation preventing, supporting innovation in the market. I mean, let's just start. What's your view on it? I mean, clearly we need regulation. I would argue we don't always need gold-plated regulation, and we sometimes just have to let the market get on with things and intervene if and when necessary. But what's your thought on that? Where do you think we stand on this?
Yes, I think the cost of over-regulation is probably as high as the cost of under-regulation in general. So it's a calibration effort to get it just right. I think that as I worked in the private sector before joining the ECB for more than 30 years, I was always more on the side of let it to the market. But I think that in most cases, actually, most of the regulations that hit us, we could understand the relevance of the regulation, but we didn't think the regulation addressed that in the best possible or efficient possible way, which I have to admit is also something that I'm guilty of contributing to, because for a very long time, banks, whenever a regulation was announced, would spend all of their lobbying efforts in explaining why the regulation shouldn't come at all, rather than focusing on making it the best possible regulation by accepting the necessity for any regulation, and therefore missing the opportunity to shape the regulation in such a way that it would be efficient and effective. So we've had a number of regulations which could have been better. So all the intentions were good, but the banks stayed on the sideline booing, throwing rotten tomatoes at the whole initiative, rather than coming on board and jointly with other stakeholders define how to do it best. Having said that, I deliberately joined the ECB because I thought something like a digital euro is unlikely to happen if you just leave it to market forces. We've been waiting for 25 years to come up with a European payment scheme, and it hasn't happened in 25 years since the introduction of the euro. We see several initiatives underway as we speak, but even those lead to still fragmentation and regional solutions coexisting with national solutions. And at some point, something's got to give, and you have to make sure that we're not completely reliant on the success of private sector initiatives that have a, let's say, mixed track record. So in this case, and also we need regulation to make it anyway something which has a mandatory acceptance as a legal tender. I think it's unavoidable, but again, also working together with all of our stakeholders, merchants, consumer representatives, and the banks to say, let's focus on making it the best possible, i.e. least disruptive and most effective for the purpose regulation that we can. Obviously, we're not writing the regulation. That's done by the co-legislator in Brussels, but we try to influence the process so that it actually helps rather than hurts.
Yeah, you have an input, and,
yes.
and I think that's important. And I think it also just kind of going back to the discussion we had yesterday is I think Donald's presentation was really good in the sense of showing us that if you have the right mindset, you can work with regulation, you can still innovate. It doesn't stop you.
Indeed.
And that's, I think, ultimately what it's all about. That you're trying to find what works and set yourself up accordingly.
Yeah, and you see that's the same. For instance, we talked briefly about the instant payments regulation, which mandates a verification of payee, at least further down the road this year, which has created a lot of very creative solutions and a completely new industry of VOP services, which weren't there before. And even though they existed before, they couldn't get any traction. because it wasn't mandated yet. So a very good idea can also get a push in the back in the good sense from a regulation.
Yeah.
So there's examples of both it killing innovation as well as enabling or fostering innovation. But it's never about how much regulations, but it's more about how good are the actual regulations.
Yeah. No, I completely agree. And I think in most cases, probably Europe does get it right. I think yesterday someone was saying to me that actually, when it comes to any aspect around data protection, the GDPR, Europe was probably the front runner.
Absolutely.
And other regions, including the US, are really picking up on it because that has been incredibly successful.
Absolutely.
Okay. I think that's it. I think that's all the time we had. There were so many other aspects that we could talk about on the subject of regulation.
Absolutely.
No, it was a pleasure yesterday, contribution on the panel, and also now. Thank you so much for your time, and
thanks for having me.
hope to
It was
see
a
you soon.
pleasure. Thank you.